All right, good morning, everyone. It is 9:08 on the morning of February 2nd, 2023. Happy Groundhog's Day. So the title of today's video is QQQ Short-Term Resistance at $313. Basically the way that I got to that is I have two Fibonacci's on this chart right now. One Fibonacci goes, let me put it on the monthly. This Fibonacci goes all the way from the bottom in 2002 to the top in 2021. November, I think September of 2002 to November of 2021. And that's the big 30,000 foot view. That's the big picture of price action right now. I also have a Fibonacci of the retracement, right? Now let me get it down to the daily here. So the Fibonacci, the retracement, so it goes from the peak of November here to the bottom in this past October. And that I have a 25% level down here. That's not a Fibonacci. That is, I replaced, and I've forgotten what the Fibonacci is at that level, like 23.7, I've forgotten. But I have 25% there. And what we've done is we've broken through that 25% level. After Jay Powell's briefing yesterday, which was really quite bullish, we got a pretty nice rally. He says, hey, inflation is starting to trend down. He's seeing the ability for the Fed to get rates to where they want them and then hold them there. Even if there's a recession, he's going to hold them there. So that's going to be kind of difficult if we're headed towards recession, which according to the bond market, we're headed towards recession. This is, this inverted bond yield, and the bond market always gets it right. So this inverted bond yield, this is the 10-2, where, that is signal for recession. Now, even though the 10-2 is inverted, the market can be bullish if you go back and you look at the 2001 crash, and then the dot-com bubble crash, and then the housing bubble crash. For the majority of the period of the time that the yield curve was inverted, in both cases, the yield curve was inverted for about 12 months before the dot-com bubble burst. And then the yield curve was inverted for about 18 months prior to the housing bubble crash. In both of those cases back here, the equity markets were bullish. The S&P, the Qs, the Russell, they were all traveling up. It wasn't until about the last 2 months or so that the top was put in on the equity markets. And so here we are. I think we're working on month 8 now as of February. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Okay, so we're going into month 8 of a yield curve inversion, which historically has lasted anywhere between 12 and 18 months. The inversion has lasted anywhere between 12 and 8 months. So we've got, between 4 and, 6 is 4 and 10 months approximately, until we can expect to see this yield curve normalize again. And then we'll get whatever kind of, crash, market, mayhem, whatever it is at that point. In the meantime, though, things can be bullish despite the big looming data, all the data that's coming in with slowing GDP. There are a couple of other, let me get to a couple of other indicators here. I'm opening up a new window because if I do it on the other window, it just kind of messes everything up. So let me go over here to indicators. And we have this PMI here that dropped down to, this is the 2000, here's 2020, here's 2008. That was down at roughly 32. And we put in a number that was close to 37 here in the PMI. And so, the storm clouds are gathering. The forecast, if you can forecast a market, which a lot of people do. That's how money managers are able to make money. because they can, they're sort of like weathermen of the financial world. The storm clouds are here. This is anything a reading below 50 on the Chicago PMI is indicative of an economy that is contracting. And so, is this the bottom? This bottom that we put in last month? Let's see, that was reported in November. So that means that, those were October's numbers. And then, December came out. And so, even though it does look as though it's put in a bottom, kind of sort of like maybe over here, like the way it looks in 2020 and so forth, is that the bottom, or is that a pop up for a further move down in PMI? I don't know. I don't know. However, regardless of whether it's bottomed or whatever, it's still a reading below 50, which is an economy in contraction. So there's something on the horizon. Whatever it is, I don't know. I don't know what it is, but there is something on the horizon. However, in the meantime, what's the old saying? The market can remain irrational longer than I can remain liquid. So this bullish run right here, I think it has further to go. Of course, I don't think it's going to go up in a perfect 45-degree angle the whole time. There's going to be some pullbacks and so on. But it's okay. It's okay to be bullish. We've broken out of this top resistance line. I think, again, that's short term. Long term, according to all the forecasts and everything, I really think that what we're about to see, and I don't know where it tops, but what we're about to see is a bear market rally that then sets us up for the next leg down. And the next leg down might go lower than this recent low. It might not go as low. I don't know. That's too far out to see right now. But for right now, we're breaking out of this upward resistance right here. And so on this retracement, this retracement that I put a Fibonacci on, level is at $313.26 on the Qs. And so for the short term, for the time being, that is the level that will be the next level of resistance. So do we get there today? We are gapping up this morning. I had a huge run up yesterday. It was nice. It was a nice day. I think it was a 2% move yesterday. Yeah, 2.14% move. And here we are in the pre-market up 1.97%. And I can almost guarantee you that it's overbought in the pre-market. Okay, so it's overbought on the 10-minute, and it's heading toward, it's in the middle. The relative strength index is in the middle on the 1 minute. And the VIX is almost certainly going to be the same, just inverse. Yeah. So the VIX has come out of oversold in the pre-market on the 1 minute, and is pretty much in oversold on the pre-market on the 10-minute. So it is possible, that this morning it's gapping up 2%. So it is entirely possible that at the opening hours, get some profit taking, find some support down here near yesterday's close, and then pop back up again. That's kind of my guess. Actually, that's kind of what I'm anticipating seeing today. Is I don't know if it'll make it all the way down to yesterday's close. Actually, yesterday's close is a little bit further down than that. Yesterday's close is right down here in this area, and then pop up again. But it's not a bad time to look for bullish setups. So that's what I'll be doing today. Of course, in a pre-market that's overbought, that's not the bullish setup. So if I can get a dip into oversold on the Qs in conjunction with overbought on the VIX, which of course you can't buy the VIX itself. You can buy derivatives of the VIX. So this is just purely a metric, but it tends to work out that when these two relative strength, I say two, but they're actually four. So when the RSIs on the Qs match up with the RSIs on the VIX, inversely match up. So when the Qs are coming out of oversold at the same time that the VIX are coming out of overbought, it's a good time to go bullish. And so that's what I'll be looking for today. Looking for a bullish setup today. And I think I will probably be able to get it after the open, and somewhere between half an hour to an hour after the open, I ought to be able to get that set up. Of course, I could be wrong. I could be sitting on my hands all day because we could open up. We could open up and just make a mad dash for this 313 area, in which case I'll be sitting on the sidelines. All right, so what else is going on? 10-year, 2-year, the dollar's breaking down nicely here. This is definitely something that you want to see for, dollar strength is a drag on the market. Dollar weakness is a bit of propulsion for the equity markets. And then Bitcoin. Yeah, Bitcoin is doing a heck of a good job of making this upward drift here. I actually really, let's see, let me zoom in a little bit here. This day right here on the 25th of January, I was really expecting that day to be a false breakout and we'd see further down move. However, Bitcoin is holding up really well here and doing a nice drift after a rocket move up, a second breakout, and now it's just kind of drifting, from bottom left to top right. Great thing to see. So yeah, just whatever strategy you use, my bias is bullish. And if I'm wrong, I get to recognize that I'm wrong very quickly and cut losses. If I'm right, then I get to, take my strategy and let it make money for me, period. All right. Oh yeah, and actually let me show you something else too here. Let's see. So let's take that Fibonacci off. Now the reason that I'm choosing 313 as kind of a target is just because it's the higher number. Here's this other Fibonacci. This is the long term from 2002 to 2021 Fibonacci, and it's at 311.51. And the only reason that I'm choosing to look at this Fibonacci, which is the retracement Fibonacci rather than the long term Fibonacci, is because 313 is higher. It's just because the target's higher. That's it. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a message, tap the bell. Thanks for tuning in, and I will see you at tomorrow morning's strategy session. I am out.